Welcome, ladies and gents, to this week's breakdown and analysis of Forex pairs at Pro Trading Academy. In this short video, we'll express our technical views for the week ahead. However, just before doing so, we want to touch on some fundamentals that you may have heard or interest you, namely Brexit. You may have heard that the UK and the EU have agreed a deal for Brexit, which is true. However, and this is important, the deal itself has to be passed amongst members of parliament who are currently seen as mixed, or we could say against the deal itself. What does this mean for the pound? Now, moving forward, we believe that there are still spikes and dips to be had. The pound will come under severe pressure, of course, if the members of parliament, the MPs, agree and do not oppose this deal. We expect the pound to fly. The vote amongst the MPs is not expected to take place until at least the first week of December. So we'll keep a close eye on events. But for the time being, we think that the pound will see some short, lower highs and possibly lower lows. There's also Fed talk. Now, Fed talk is the Fed is the central bank that belongs to the US, and they are the main contributor behind the power of the USD. Up until recently, they've been on a cycle of increasing rates month on month or every quarterly. Now, recently, there's been a lot of talk that they will cease to end their cycle of rate increases as soon as March 2019. There's also been a couple of tweets from President Trump about this, namely this weekend. He's clearly sending out a message to the central banks, hinting for a weaker dollar. So it'll be interesting to see how the markets react. However, we have December fast approaching, and a major index like the CME group, if you look at Bloomberg, Reuters, they've currently priced in a December rate hike well above 70%. So what does this mean for the dollar? Generally speaking, if the rate hike is going to come in December, you will see this index reach closer to 100. And of course, that would be bullish for the dollar. Now, the markets will look to watch data releases and how the markets are performing within the US. So, this week we have USD third quarter GDP. We also have a Fed speech. We expect volatility, but if rates are going to increase in December and the market is still a little uncertain, then I think the USD will continue to find buyers at pullbacks, which it has done thus so far. So it'd be interesting to watch. And of course, we will keep an eye on this and update you whenever we feel we need to. Moving on to technicals, Moaz will now take over.
Hey guys, here we start with gold. After achieving more than 300 pips from our Pi entry, last week we talked about the importance of that key level and how the price could start making corrections before breaking it to the upside and reach our target at 1270. And as we could see, when the price touched that key level, start to show us a negative candles. So let's have a look on the 4-hour time frame and see what are the possible scenarios that gold can make on the coming days. This is a 4-hour time frame, and as we are all agreed to the importance of that area and that breaking it to the upside will lead the price to go to a higher levels. Also here we have something interesting for you to see. After this strong bullish move, the price started to move inside an upward channel, and after breaking that channel we saw a retest and then falling. So here the price is repeating itself again, strong bullish movement and then move inside a channel, consolidating. So here we could expect a break to that channel to the downside, and from there we could see the price visiting a lower prices. And we see that it's better to close your buy positions and wait for a clear break to that high. And of course, we'll keep you updated. Euro and ZD. We still have the same view as the last week for this pair, and we're expecting to see the price reaching 1.69 during this week. Your stop loss should be a close of a 4-hour candle under that blue zone, as breaking this area to the downside will lead the price to continue falling. Euro USD. Last week, after we saw the price back again to that important key level that we talked about it before in the previous videos, we expected to see a correction to the downside, and we had a sell entry from that point. The price currently is down by 120 pips from our sell zone, and after we saw the daily candle closing under 1.13600, here we could expect the price to continue falling until it reaches that trend line. So let's have a look to the 4-hour time frame and see from where we could have an entry. This is a 4-hour time frame, and that's the area that we talked about last week, and we took a sell from. So currently we're expecting the price to start making a correction, reaching our sell zone, and from there we could expect the price to continue falling, reaching our targets that market in green. And of course, the stop loss have to be at the close of 4-hour candle above that level. This is the 4-hour chart of the pound dollar. Last week we expected to see the price pushing higher from the area, and we said that breaking that zone is very important to see a continuation of the uptrend. But that didn't happen, and the price just rejected back from it. And currently we see JPY USD to be more bearish on the coming days, and we advise to avoid trading it until we see a clear break to that low, or to see the price up there at this trade area, so we could have a sell with a tight stop loss. And as you know, the fundamentals may play an important role in the coming days, so be careful and expect to see any surprises. And of course we will keep you updated through our Telegram channel if there anything new. The dollar yen. Last week we had a sell entry at 113.14. that we were expecting to see a strong bearish behavior from it, so the price could just go back under that trend line again. But that didn't happen, and we didn't see any strong bearish momentum. And we saw the price just reflecting from that important support area. So currently we could see the price visiting a higher levels at 113.67. And it's very important for the price to be above that area, as breaking it to the downside will lead the price to go to 112. The pound yen. As you can see that the price didn't move that much from the beginning of the last week. It's still consolidating above that support level that we talked about before, and currently we're expecting it to reach this blue area to complete that bullish pattern, and then we could see a correction to the upside reaching our sell zone. From there we're expecting the pound yen to continue the bearish move until it reach 140 levels. And it's very possible for the price to not make all that correction to the upside, reaching our sell zone at 146.35 because of the confusion that the GBP is facing currently. But breaking the 140 levels, and I mean this blue zone, will be a good sell confirmation, and that could just lead the price to keep falling directly to the price of 140. Thank you for watching. To keep updated on all our future videos, charts, and analysis on Forex, please subscribe and follow us on our Telegram channel. You'll find the link on the description below. Have a good luck.